Hey guys, how's it going? And thanks for coming. I'm Nick, and this is Real Life Money. We were talking about real life and money because schools aren't. So let's get started. So if you've seen one of my videos from last week talking about I'm going to be doing a weekly stock market review, welcome back. If you're new, welcome. If you like, I'll leave a link to in the description to the other video telling you what's going on, and I'll give you a quick overview. I'm going to be looking at the stock market, what it's been doing per week. So it's kind of like a virtual game that I'm following. So last week I bought a bunch of stocks and mutual funds last Friday. So a week happened. And now it's the weekend, and now I'm going over what happened during the week, and boy, it's been a week. Stuff is going down, guys, and I'm glad I started it this week, because... So I'll give you a quick overview of what's going on. As you can see from this chart, I don't care if you could read anything anywhere, all you got to see that it's down. Alright, now the main reason why it's down and it's everywhere in the news, because it's kind of a big thing. We might be going to war. So North Korea and us are kind of batting heads, and stuff is hitting the fan. Now, I'm glad I started this week so you guys could actually see how the news and just a bunch of things can affect the market. Like, this is kind of a big deal. It's a bunch of scary stuff going on. So obviously negative news brings the market down. Alright, so I'm going to show you the overall structure that I have set up for us. So let's do that fade in effect. Boom. Alright, so this is what we are going to be looking at. Now, it might look scary. Alright, so we're going to take it very simply. Nothing crazy for beginners. So just looking at the chart, don't worry about the greens, the reds. Obviously that means up and down, and the rest really might not matter, kind of. So basically look at just the line. You see, if you look at the main chart, the yellow line is basically the average of all of it. Takes into account the highs and lows of the day, when it opened, when it closed, all that good stuff. So do not get overwhelmed. I'm not going to be throwing calculus and history at you. We're just looking at the overall, how the market does, what it looks like, and let's look at what else I got for you. Okay, so on the left-hand side, it shows you the different stocks and funds we have. As you could see DJI, the G1. Those are indexes. So indexes, I have another bunch of other stock market related videos if you want to check them out. But what an index is, it mirrors the market. So like what we have in the chart, the Dow Jones, it mirrors, or it has 30 of the largest companies in America. That's what Dow Jones is. The other one, S&P 500, kind of self-explanatory, 500 of the largest companies in America. And the other index just below that one is the NASDAQ. That has a bunch of tech stocks like Google, Amazon, Facebook, all that good stuff. Right, so let's start off with, boom, we have Apple, our first stock. Now these stocks, I'm not saying these are going up, I'm not saying these are going down, I'm not saying they're good companies, bad companies. I'm saying these are companies that we all know. Might as well look and see what they do. Obviously, Apple, everyone knows them. They are the largest company in the world. Possibly the first company hit $1 trillion, but we'll see. So, you could see kind of toward the left side of the screen next to Apple, you see that little chart, and it shows you the return, unrealized, realized. So I bought, for each of these stocks or mutual funds, I bought $10,000 worth. So with the stocks, since you can't, buy fractional shares, as you can see, it has $157 and change. if you had $150 even and not the change, you can't buy one share. So that's why you can't just put an even $10,000 in. So you could see the position, it says L64. L just means long. You're holding it for a long amount of time. And 64 is the amount of shares that I bought. And I bought last Friday at market close, it was $156.39. So with these stocks, I bought in at that amount. I took $10,000, divided it by the stock price, gives you how many shares you could buy. Fairly simple math. So that's kind of what I did. I tried to make it as close to 10,000 as possible. Now, what this program actually does, it was a free app. I just downloaded it and hey, it's kind of working for us. But as time goes on, it's going to show us the returns that we're actually getting. So let's look back at the chart. All right, so you can see that our return since last Friday, or it's been a week, Apple is up 0.7%. I bought in $156.39. Right now, you can see at the top, it is $157.48. And sorry if I forgot to mention Apple. It is AAPL. You can see them all alongside the left side. Those are basically abbreviations. So they're called ticker symbols. So if you go to, let's say, Yahoo Finance, you type in AAPL, it pops up with Apple, and you can check them out. Now realize I didn't put any strategy whatsoever into when I bought these stocks, guys. I just wanted to start a weekly thing, so I bought it that Friday. I would have waited, and good thing I would have, because the market was doing crazy stuff. But we're just taking it from when I bought it, and we're just moving on from there. So for the past week, I mean, Apple did a pretty good week, actually. They did 0.7%. We gained $69.76. Not too bad. You could see cost for the 64 shares, it paid just over $10,000. So we're up with Apple. All right, so the next company we're looking at is Zuma Boom Disney. D-I-S. Everyone knows Disney, that's why I picked it again. Right now they are at $101.99. So let's look at when I got in at it. So you look at the position, 93 shares. I bought at $107.69. And they dropped significantly. 5.29%, guys. Now, this is also another great thing I'm glad I got in last week to show you guys. This happened because they released their earnings. What earnings is that they, basically tell the public what their revenue was, their net income, all like important numbers that people want to know what happened for the last quarter. So they obviously underperformed a little bit, didn't match up to what they were expecting. So you could see that they dropped ridiculously on that. So going back to the chart, it is 101. I got in at around 107. Our initial cost is $10,015, just a little bit above our expected thing we were going into. And we lost $530, guys. Just over 5% because of their earnings. Now what's interesting is when this type of thing happens, you could react two ways. If you have their stock, you could be like, oh no, they're doing bad, and sell out. Or you could think of this as a buying opportunity. That's a fairly decent drop. So if you get in now, it could be considered a low point. And if it rebounds, you can make a little money. Me personally, with this North Korea thing happening, I'm not getting in anything right now. All right, so next on the list is Boom Facebook. Everyone knows what Facebook is. Everyone uses them, or mostly everyone. So that's why I picked it. So, looking at it, it closed on this Friday at $168.08. Sorry if I forgot to mention that those numbers next to the 168, that tells you, obviously, it kind of shows you right below it, is the day range. It's kind of small. But that little 0.41%, that's what it did for Friday. That's the day it closed. So it was up a little bit on Friday. So let's look at our position. We got 59 shares at $169.62. So it dropped 0.91%. We lost just over 90 bucks. So far you can see different companies do different things. Apple went up. Disney dropped because of earnings. Facebook dropped a little bit. It's called volatility. And the more volatile a stock is, the higher it could go or the lower it could drop. It really depends. Facebook is a tech company. Tech is booming right now, obviously, because the internet is like a thing and it just skyrockets. But if they miss something or something happens, they could drop just as quickly. Now, so far, we've been looking at just stocks, like individual companies. Apple, Disney, Facebook. So for the next one is actually a mutual fund. I personally own it, but it's a mutual fund. It is a package of a bunch of different companies. So let's look at this bad boy. Boom! Don't mind the chart. It's kind of weird. I mean, you could just follow the yellow line, basically. That's the average of the price. And those lines at the bottom, I don't really know. But this is Fidelity Contra Fund. This is a Fidelity fund that has a bunch of growth companies. Some of their top holdings are like Facebook, Amazon, Apple, and a bunch of growing companies like that. So let's see what's going on. I got in at $118.98. Right now, it closed at $117.13. So on Friday, it was up 0.38%, a little higher. But for the week, going to the return, it is negative. It dropped 1.55%. And again, that is due to the North Korean news. And since it does have a bunch of growth companies, tech stocks, it is volatile, so it did drop kind of significantly. So now I wanted to show you something that is different from this mutual fund to a stock. Zooming back in. You can see the cost is exactly $10,000. We purchased 84.05 shares. So with mutual funds, that's a little different. If you don't have like the complete amount for a stock, you can't buy one share. For mutual funds, you put the whole $10,000 in. And we lost just over 150 bucks with that one. So let's move on to the next one. Boom, popping off with Google over here, because they're a huge player. Obviously, everyone uses them. Uses them for search. They have actually a phone that's out that's pretty good. They own YouTube, so they're kind of big. So let's see what they're going on for. They closed at $914.39. That's a lot per share, guys. But you know, you don't have to put a huge amount. You know, you don't have to put in 10,000. If you want, you could buy like one share. So in this example, we bought 11 shares at $927.96. That was actually a little bit, kind of a lot of it, over our 10,000 mark, just because the amount per share is so much. But I wanted to get at least 10,000, so I had to buy that extra share. That's why we have 11. But for the week, they are down 1.46%, almost dropped off 150 bucks. So real quick, sorry if this is like kind of a longer way. I wanted to give you basically the structure that I have. Obviously, the first time is going to be a little bit longer than the others. Once we have it set up, we'll just be like, hey, this went up this much, and you know, and going over the actual news. So let's move on to the next one. Starbucks. Obviously, everyone knows Starbucks, but I wanted to pick this one just because obviously the other ones, they're like north of $100. So I wanted to show you guys there are companies out there that are slightly cheaper. This one closed at $53.18. You could see that we got 180 shares at $55.44. Their earnings, Starbucks had earnings maybe a couple weeks ago. They did actually very bad. So they dropped, obviously. You could see in the chart. Sorry if I neglected this cool chart over here. But you could see it peaked, at $64. And since then, it's just been dropping. So some could see this as a buying opportunity. So that's kind of why I put it in there as well. If it rebounds, that would be kind of cool to show you guys. But since last week, they are down just over 4%, losing us $400, those little bums. So you guys might, when I say, oh, we lost $400, not caring too much, because this is a long-term project, guys. Yeah, you can lose money, but I want to show you guys that if you hold these things for the long term, it can rebound and even make you money. Now, some might say this isn't my actual money, so I don't care, but I do actually have a bunch of these companies. Actually, in the next video, I'll tell you some of the companies of this list that I actually own and some of the mutual funds. If you want to guess to see what I got, let me see what you think. So basically, if I showed you that we lost money on this, most likely I probably lost money too, but long term. So let's move on to one of the main things that I wanted to show you guys is S&P 500. Like we said before, this is an index. It follows 500 of the largest companies in America. So this is a huge thing to look at. This is what a lot of people look at because this is what they see the market as. There are so many companies, so widespread, that this basically tells you what the economy is doing. So, and this is kind of like a mutual fund. There are a bunch of out there. You could probably find like 500 index, something similar to that. So this particular one, the ticker symbol you could see left side, SPY. Some people call it spiders. But they closed at $244.11. We got in at, I thought I got in at $40. I'm like, wow, what the frick? I'm going to be rich, guys. No, we just got over 40 shares. But we got in at $247.41. So in the past week, again with the news, it dropped 1.3%, losing us just over $100. And coming up on our last one, guys, boom, this is small cap. This is Vanguard small cap. So what small cap means, it's short for small capitalization. That they're basically just smaller companies. Obviously we've been looking at Apple, Disney, Facebook. Those are huge companies. I'm less educated about small cap companies, so I'm kind of doing this for myself as well. Small cap with smaller companies, they are more riskier. They can shoot up quicker and drop quicker. But for the long term, since there is more room to grow because they are smaller companies, they can give you larger returns. So this is kind of why I'm following this for myself as well. So we got in at $53.15. We bought just over 188 shares. Again, this is like a mutual fund type of thing. Bunch of small companies in a package. So they closed at $51.76. And you could see, compared to like the last one, the S&P 500 dropped by, it was just over, 1% or whatever. This dropped by over double, guys. 2.6%. So you could see the volatility in smaller cap companies. This is why I chose it for you guys, so you could see how, the difference. So that's the structure we got going on, guys. We have some stocks, some mutual funds. We're seeing how we're doing. Right now, we're not winning whatsoever. But with this news, let's actually get into that. North Korea, they were like testing missiles for like a little while now, and they finally put like a nuclear warhead on a missile. And they were planning on shooting it at Guam. It's a United States territory. We have military bases there. So that's scary. So obviously our President Trump is saying things, whether you agree with him or not. Stuff is hitting the fan. So North Korea is saying they could actually or planning to attack us middle of August. So relating back to the market, it's a scary time. It is dropping. Some might see it as a buying opportunity. If we do get hit, obviously no one wants that. But if it does happen, market's just going to drop. That would be an interesting opportunity for stocks. I would stay the hell out of it right now because we have no idea what the hell is going on. So honestly, guys, we're just riding the wave, seeing where it takes us. I don't know where it's going to take us, especially right now. I'm glad we got in it, though, to watch what happens. And if it does happen, I want to show you guys the rebound, because in every instance, every crash, 2008, dropped 50%, guess what? It rebounded. And since then, it actually tripled. So that's why I'm doing it for you guys. I want to show you what the market's about. I'm using terminology like per share and returns so you guys kind of get familiar with it. If you have any questions, comments, concerns, especially relating to this stuff, leave them down below. So that's kind of it. I just want to go over the basics of how I got it set it up for you guys. Hopefully you're enjoying this. I'm going to be doing it per week, obviously, for the weekly review. This is our first one ever. This is kind of awesome. And thanks for watching, guys. This is pretty cool. And don't forget to subscribe to my channel, Real Life Money. We talk about real life and money, not only the stock market, because schools aren't. I'll go over other personal finance things too. And thanks for watching again, guys. We'll see what happens next week, so we'll see you in the next one. Good luck out there.